Hey there, it's Charles. Welcome to QuickBooks 2016. We are working in Module 3 right now, and we are talking about customizing QuickBooks environment. We are down to video number 4, which is the start of the charts of accounts, which is the most important part of QuickBooks. You want to know if you spend money, where did you spend it? Or where do you spend that money? And you would want to spend, you would want to know where you have actually spent that money to, or what you have spent it for. Because if you are giving out money, it means you are getting something, or you have actually paid something. And if you get money, it means you have gotten that money from somewhere. So that's what we are meaning. You want to know if you spend any money, you want to know where did you spend it, and you spend it, like you spent it for what. So if you receive money, the question is, are you receiving that money as income for the business, or it is income that you've gotten? It is you've gotten the money, but it is in a different source, like it's not for business. In other words, the money you get the business is through the service, the products and services you are selling to the customers. So if you have not gotten the money from that point, then we need to know where have you gotten that money from, because any money you are spending, you must have earned it. So make sure you watch both parts of the charts of accounts, because it's a bit wide and it is very important. So we need to split it into two so that we can be able to handle each and everything. So you need to be able to watch the two parts of the charts of accounts, because you want to make sure that you have all your charts of accounts set up correctly, so that when you run the reports, they are accurate, and in other words, they are accurate and things show up in the right place. In other words, we don't expect income to be reflecting in the balance sheet. Of course, we know everything, all those things that are going to be going to the income statement. So if you set the things right, then you have those same things showing up in their respective categories or their respective areas. In other words, they show up in the right place. So let's get started. I want us to head over to QuickBooks and start working with the charts of accounts. This is where we had left it. So we go back to our home screen. I want to remind you that if you are looking for charts of accounts, the only place you can find them is to check the company section. Remember, we said there are 5 sections within the QuickBooks home screen. So you go to the company section. This is the company section, and we are looking for charts of accounts. So the easiest way to get the charts of accounts is by looking at the home screen just right now as you are seeing, because you can just go to the company section and you click and you pick them. Those are the charts of accounts, and even the name is right up here, says charts of accounts. So we are now seeing that we are seeing a different list. We are seeing a list of different accounts that are already set up in a QuickBooks. And how did we get these accounts? Because someone may be wondering, where did we get those things? We never set anything. We set these accounts when we went through the Easy Step interview, because the things you answer there tells QuickBooks what to include and what to exclude as far as charts of accounts are concerned. So you really need to be careful when you are dealing with that Easy Step interview, because it determines or it dictates what is going to be reflecting in the charts of accounts. So now I want you to think of this charts of account, this chart of account, or your chart of account you are seeing on your computer right now, as categories that you apply your transactions to. These are just details of how your transaction may look like. It doesn't necessarily mean that what is here is actually what you should have on your balance sheet or on your income statement. No, these were just created as a rough estimates. So this one, they are just giving you a category of how your business transactions, because the business may be terming some of these expenses in a different way. But this one, they are just giving us a broader category of how we can actually categorize the expenses that we are going to look at in our company, because these were generated as per the easy step interview that we went through. Because for example, if maybe you go to, if maybe you are the owner of the business, or you are an employee, you are the accountant of the business, and you go out for, let's say, for lunch, and you find that that lunch was actually a legitimate business expense. In other words, the company has been offering employees lunch. So if you go for that and it is a legitimate business expense, then you want to put that to an expense account. We can look for an expense account that is going to actually help you describe the lunch expense that the company is incurring. So you look at all these, and we can see here we have meals and entertainment. So we can group it there. If you had maybe meals and refreshment, you can just put it there. But there is no way you can put lunch under repairs and maintenance. It won't make sense, honestly. So these are just giving you the category of how your expenses should actually look like. So if your expense as a company is lunch, we can categorize it and we say meals and entertainment, and we put the figure, or we post the figure there. Or we can create a sub account on this meals and entertainment to just show that at least it's not meals and entertainment, but it is lunch expense that is paid. So that's one of the example. The other thing is, maybe you think of, if let's say your company has been serviced, a company car, and you've taken maybe the car for maintenance, repairs and maintenance, or you've taken it just for service, even if you have not repaired anything, but at least you've taken it for service. You can actually put that expense, you can put that cost to the, you look to which one is going to be a little bit more close to what we are doing. We have automobile expense, we have repairs and maintenance. So you can put it on under repairs and maintenance, or you can put it in the general name, as long as it is an expense. We can put it in automobile, because automobile would be a bit general. It will have so many things than the repairs and maintenance. Repairs and maintenance is very specific to just repairing. So that's how we use these accounts. So there are a lot of different accounts that we are going to go through, but we can maybe just go a little bit into, we just go a little bit through this list. We see what is there. We talk about some different accounts that maybe they are not familiar to you, and we would also see how to add our own, because now we may look into this category and you're not seeing anything that is related to what you are recording. So what you can do, you can create your own. So now when you just scroll through these, you see there are very many. There are very many. There are very many there. Those sound you are hearing, those ones, they will just, you can actually set them. They're automatically there, but you can actually turn them on and off from the other setting we saw. So if you don't actually know where to go to do that, you knew from the preference, you just go back and rewatch that preference video that we did, company preferences. So this is just actually a generic charts of accounts, that QuickBooks decided, and it based on how we answered the questions in the easy step interview, and it is based on how we answered it and on the type of the business, and it was able to generate these general expenses, these general accounts for incomes, expenses, and all that, depending on the type of business that we selected. So QuickBooks, based on how we answered those questions when you walked through the easy step interview. And the good thing, there is a lot of accounts that you can actually add straight away to your charts of accounts, and then some that you might actually add over time, because there are some expenses that you are not going to just add from the beginning, and we will add them, because now if it is a construction company, some expenses keep on coming as you keep on progressing with the work for the customer, because there is no way you are going to ask for painting when you have not actually finished the building. So some of these things, they are just going to be coming as we go ahead as we keep working. So some of them we are going to create them straight away. We create them from, there are those that are very normal. We know everyone pays tax. You can create that one straight away. If you have a loan, we know straight away that you are going to be paying interest. If you have some assets, we know straight away that you will be having some depreciation. So those are some of the things that we are going to create straight away. But others, they just come as the project goes on. So, but now I want you to note something. These accounts, they are set up by type. This is the type here. These accounts are set up by type. For example, each type, you will notice that the names of accounts are arranged in an alphabetical order. If the type of account is accounts receivable, you will see alphabetically what is in accounts receivable. If the type of account is fixed asset, then it means you will have those fixed assets arranged in an alphabetical order. That's how they are done. So you'll have to actually say that, and you'll be able to, because now if maybe we look at some banks, because these are assets, these are liabilities, this is equity, this is income, this is cost of goods, these are expenses. Maybe we look at banks. When you check here, we are not seeing any bank. We are not seeing there. And that's the first type of account that I want to talk about. The good thing, you can actually notice from the start to the end that we don't have any bank here. Why is it so? Is because we haven't set those ones. QuickBooks doesn't open those ones for you. You have to set them up. And that's why we are going through some of these steps before we actually start working. And even when you set up, when you finish the easy step interview, and it brought that message, congratulations, these are the same things that it was asking. Do you want to create banks? Do you want to add people, customers? So those are the same things. Now these are the things that we are actually going to do right now. So a bank account would be what we call a checking account. A bank account, QuickBooks call it a checking account. So it would be a checking account, it would be a savings, it would be a money market. I'm not going to just explain some of these terminologies. Like for a money market, those are short-term financial assets. As long as you can get money on a short-term basis, they are not like those things of shares and all that, which are found in the other, because we have money market and the other one for long term. Is it capital market something? So QuickBooks only recognizes those three types. A bank account should either be a checking account, or it should be a savings, or a money market. That's how they are categorized. So if let's say you have a PayPal account, maybe there are some credit card payments that you do. You receive money using the credit cards, the debit cards, and all that. So all those are going to be considered as bank accounts. Whether money is, you are using an account that you opened in the bank, or it is those online payment modules, they are all going to be considered as bank accounts. So we need to go ahead and we start setting those ones up, because they are the first things that we want to set up. There is no way you are going to start receiving money to enter customers when you don't have actually where money is supposed to sit, like on which account money is supposed to be credited, and where you are going to pick money to pay other suppliers and all that. So we need first, that's the first thing that we need to do, to go ahead and create. So how do we do that? You can right click anywhere in this screen, right click, and that dialog box will come. So you will notice what is on that dialog box, because it is very important. We can see there is new, there is find. Of course, if you are looking for a certain account, you can find it, or there is new, but here we are creating. We know what we are doing. We are creating, so it will be new. We have new. You can see there is edit account, there is delete account. There is also down here which says make account inactive. So let me first mention something about delete account. If you are in any list in QuickBooks and you have an item from a list that you want or that you would like to delete, you are not going to be able to do that if at all you ever used, I'm repeating, if at all you ever used that account. There is no way you're going to delete it if at all you ever used it. So what are we going to, what will be the action that we can take on that account? That account, you will need to make it, or to make that account inactive. If you ever use that account, you can't delete it. So the only thing you can do to that account is to make it inactive. Because now when you make that account inactive, the numbers, they are still going to be showing on your report. If you ever used an account and it, let's say, has maybe a balance of $10, those numbers, they will keep coming even if you have made it inactive. But that account will not show here like the way you are seeing these other accounts. If you make it inactive, it will not be showing, but the numbers will actually come on the reports. Because when you are running these reports, we run for everything that we have, actually for the transaction that we've entered in the system. So making the account inactive, it's like hiding the account, making it hidden. So, but we've said we want to create a bank account or a checking account. So we have to go ahead and click on new. We click on this new. And when you click on that new, that dialog box pops up. So the first thing QuickBooks will tell you is what type of account that you are going to create is. You choose the type of account, because the reason why they are saying the account type is because QuickBooks arranges those charts of accounts as per their account type. That's why it is very important for you to define what that is. And now we've said we are creating a bank account. So we come here and say bank. For us, we are creating a bank. So when you look at here on the right hand side, it will display for you. As long as you click on any of this, it will show you the different examples that are relating to that account that you are trying to create. So if you go to the bank as the account type, it will show you the type of accounts that you can actually create for cash. We have a pet cash, we have a checking account, we have a savings account, we have a money market. Those are the ones. Maybe other versions, they may be having more, because you are seeing even more here. You can click on that to be able to get other information, but those are the ones that we are basically seeing there. So after clicking on the bank account, and we've seen the different bank accounts on the right hand side, we can now click continue. The next thing that you want to do is we put in the name of that bank account. We are not here, we are not meaning account numbers here. We are just meaning if you have an account in Stanbic, if you have an account in Standard Chartered, if you have an account in any bank. So those we don't need your account number here, but what we only need is where that account is. So we can call it, I'm just going to call it checking account, like the way they are calling it, checking account. We can also come here and put in a number. Maybe this is bank number 1. We have so many banks. You can just call it bank number 1, bank number 2. But those ones, they're not really important. The only thing that is important is to put in the account name. So the accounting name, I'm going to call it a checking account. So for you can name it, you can name it anything that you want. You can call it Stanbic, you can call it ABC, you can call it Standard Chartered, you can call it any bank that you want to, or you can call it your name. So anything. But the only thing that I want you to concentrate on is how do we do that. Someone can also call it an operating account. And another person can call it PayPal. It's just an online payment platform. And you might call it anything that you want. But for me, I've decided to call it checking account. So I'm going to go ahead and just continue to display the another screen, because here we have a description. You can also put a description. This is what? This is a bank account. Maybe you put in small letters, bank account. You can also just ignore this and you don't put anything here. Here we said you don't need to put in the account number. You don't need to put in the account number and the router number. You don't need to put those here. They are not necessary. So we've done, we shall look at how we handle the sub accounts, those ones. But of course for banks we don't have sub accounts. So that's why I've skipped it. But we shall talk about sub accounts in a little bit later. But generally, banks, we know banks, they don't actually have those sub accounts. But there are other things that actually having those sub accounts. But just know this option here is optional. But I want to mention something that is that is needed, at least a description. That description is showing what is all about that account. What are you creating? Are you creating? It's anything that is going to explain what you have just created, but it needs to be there, to just be in a professional way. Because now if someone just sees checking account and doesn't see any description for, will just be wondering what is that. But as I said, I'm repeating, we don't need to put in the bank account, the bank numbers, account numbers, and routing. These routing numbers, they are if at all you are using, they are cutting money through those 50 something. We don't need to put all that information there. For those who are using those Swift codes, they know that those routers. So you don't need to put your bank account number and the router number here. Even if you plan to download transactions from your bank, you still don't need to put that information here. But what is very important is for us to put in your opening balance. So how do we get to know our opening balance? Our opening balance, let's say for Feb, is the closing balance for January. So how do we get to know that balance? What you do, you will actually go and get your first bank statement from when you are starting, maybe from the period that you are actually preparing or starting this company file. If you said my company file is going to start 1st January 2024, then it means the bank statement you are supposed to obtain, it will be the bank statement for the month of December 2023, previous year or the prior period, because the closing balance for previous period is the opening balance for this period. The money you be with as at 31st December 2023 it is probably the same amount that you will be having as of 1st January 2024. Hope that one is very clear. So if you want the opening balance for Feb, you will pick the bank statement for January, and you will pick that balance that is on 31st Jan. It will be the beginning balance for 1st Feb of that period. So when you pick that financial statement or that bank statement from the time that you are starting your QuickBooks. For example, as I was saying, just that we've said for us, we picked our fiscal year to be 1st January 2024 to 30, meaning it is closing 31st December 2024. The question is, how are we going to know our opening balance? Because now we are in Feb, we have already moved ahead in our fiscal year. So, but for us, we said we are going to be using January as our starting month. So even if you have just purchased QuickBooks today, but you want to record the transactions from January to December, you need to get the previous, the prior period before Jan or before the beginning of that. So you need that bank statement. The other option, you can even get because now if you are in Feb right now, January has already passed. You can also pick for January. It will be showing at the top as the opening balance for previous period. So there are two options, but the other one is the best one, that the closing balance is always the opening balance for the next period. So the reason as why we need to get that bank statement is because we want to pick the right opening balance. So now, because if you are creating, we make sure we enter those balances at once. We are creating that account, but on top of that account had some money on that account that was still there. So when you are setting up, you go ahead and put those entries. So let me just assume that maybe we had, let's say, $20,000 for last year, meaning for beginning of January 1st, 2024, we have an opening balance. We go here, enter opening balance. You click there, you put the opening balance. Remember here, we are just typing 20,000. I'm not putting in any dollar sign. I'm not putting in a separator or what we call a comma anywhere. But I've just put that, and I put the statement ending date. Of course, the statement ending date, we said we picked the one for December 31st. The other person can say it is 1st Jan 2024. But for me, it is better you say, because the opening balance the closing balance as the 31st December 2023 is the opening balance for January 1st. So if they are saying statement ending date, you put the prior period and you click OK. Now that is done. We are done with putting that amount. So you will not start. I never put in a dollar sign, and I never put in a separator here. But you are seeing even the figure. The figure is already they have already put in the separator, and they are put in the QuickBooks had actually set this to 2 decimal places. So you will notice those 2 zeros that are there, meaning there are 2 decimal places that were pressed there. So after putting in that balance, we can now go to down here. There is close and save and close. There is save and new and cancel. So I'm going to ask to clarify those so that you can actually be able to finalize that, because now we have save and close. What that means is that here we are going to hit save and close, because we want to open, we can open more bank accounts. We can open like 2. So we need to say, if you say save and close, it means you are closing dialog box, all of it. But if you say save and new, it means you save this one, then you put in another transaction. So that's the meaning. So we can say, maybe we just want to create only one. We can say save and close. Click save and close. But now they are saying setting up online services to save time. Those are bank feeds. We shall look at bank feeds in a later module, but those ones you can actually go ahead and set those up. But for now, we don't actually need to do that. Just know that that message will actually keep on popping up whenever you set up. If let's say you set up a bank account, it will be bringing those things that you set online banking. But we don't need to do that right now. I said we shall do that. We shall do that later. So we can click no, and we are done. So you can now see the checking account is here, plus the balance that we have of 20,000. Hope that one is very fine. But now, what I want you to recognize is that if let's say we were in, because if you double click on this, let me just double click to open that balance that we put in. You are seeing the date we put here. Others, I said someone can actually select 1st January 2024. So there are certain things that are actually going to happen. If let's say today is this is a month of June, and we are entering a balance that was there on January 1st. If you're entering a transaction that is already past 90 days, sometimes QuickBooks brings up like it pops up a certain message that it says what you have entered, it is actually past the 90 days. So what you have to do, if at all you never set that in, because we set those preferences, there are those transactions that QuickBooks can actually allow you to enter those transactions that are past 90 days. Because when you do that, when you put in that information and it is past 3 months or 90 days, it will pop up that message and you get stuck. Don't get stuck on that point, because if that comes, it means in the preferences you never set that up. So you just click yes and continue. But here we never had it. I just want, because it may come, you may be using a version and it pops up and you are just there stuck. You don't actually know what to do next. So we are done with that. So we said when you double click, you can see the amount. The amount is here, the balance. Even here you can also see the balance total. So we've now created one. You go through the same thing and create as many as you can. But here, since we don't have more time, let's proceed and look at, maybe we look at something else that we can do. But maybe to be more clear, let me just add one more, and we call it a day. We click new. We'll right click anywhere in those charts, and then let me go back. Here we right click anywhere, we go to new. Then we have to select the type of account. It is a bank. We click continue, and here we give it a name. Maybe this time round I'm going to call it savings. It's a savings. I can call it savings account as a description. Savings account. Then I also have to put in the balance. Let me assume that we have maybe $10,000. 10,000. The date, still the same date. Then I click OK. After that, I can save and close, because if you click save and new, it means you are adding another. But here we are finalizing. But for you, you can click save and new and you add another bank account. But I just want to show you how that is done. I said the thing will keep on coming to set up bank feeds, but we shall look at that in a later module and we'll learn about it. But for now, we just click no. You are seeing we have added the savings account and it has that $10,000 as our figure, as the balance. So we've now finished adding those bank accounts, and we know how to add those up. So since we have now created those accounts, those bank accounts, it means if at all there is anything I want to pay, then it means I can just write a check or I enter that bank transaction. But there is no way you could do that before you have an account, because there is no way you are going to start transacting where you don't have an account where money sits. So we can now be able to have those accounts where we can put our money, and we can be able to write bills or to write checks to clear off some bills, since we have already created accounts where we can withdraw the money from. So the next type that I want to talk about are your assets. You have got a couple of assets here, because there are very many assets that you have. In a business, you may find that you have very many assets. And here we are seeing there are only two that were created for us. So we need now to learn how to add those assets. But now for these assets, it's now here at this point that your accountant is going to be the one to do what? To help you or to assist you in doing that, because you may not know which accounts to set up for those assets, because an asset is something your business owns, and that makes it more valuable. You may find that maybe your business has furniture, your business has vehicles, it might have, maybe it has also buildings, it might even have land. Some assets they appreciate in value, others they depreciate in value. So the fact that QuickBooks doesn't actually handle or doesn't do depreciation, and the reason as why QuickBooks doesn't do depreciation is because there are so many different ways to take care of depreciation, and that's why your accountant will be the one to guide you on that matter, because some accountants, they prefer to do depreciation in a different way, since we have so many methods that we can use. Every accountant will have his or her own way to do the depreciation. So the only thing that I'm going to guide here, or the only thing that you need to do with your assets, because I've said the company might have different assets and they are very many. You may be having chairs or desks, they are in thousands. There is no way you're going to create an account for each chair that you have, and you end up having 1,000 accounts for assets. That's why we are requiring your accountant to assist you on this. The reason is very simple, because the accountant knows that if I'm having those other things, I can group them into a pool or a basket of assets. I put them together as long as they have some similarity. Because now you may find that if you have office chair, office fittings, furniture, and there are so many things that you have, the desks and all that, the accountant can just term those ones, group them, or categorize those as fixtures and fittings, or you can call it furniture. So some of the things that those are they are very basic things that you can actually pick, but some of them that if you see you can't actually, because it also depends on the business, because some of these assets you may group them and you find that they have a tax implication. You may group one asset which is not supposed to be grouped to another. So that's why here I recommend that at least you get some assistance to know that, at least because there are those, some governments, they are giving wear and tear and all that stuff. There are so many benefits that you can actually get. So it will help you to have the right value, or to classify those assets in a right way. So what we are going to do here is that we are going to set up a pool of assets. And what I mean by that is that if, let's say, you have different vehicles for your business, and what we don't want to do is we don't want to set up every single vehicle, we give it an account. We set up an account for every vehicle that is in the company. So as you can see here, they have already set for us furniture and equipment. They have added those ones. So we can now group those things like chairs, tables, desks, and all other things that can actually come to that point, and we'll get one single value for furniture and equipment. Because you may find that a company, as I said, it has 1,000 chairs, it has 1,000 desks, it has 1,000 tables. So those, there are very many. There is no way you are going to be creating each and every item. So you create what we call a pool or a big basket, so that you can have all those that are within that same general account that you have put, and you have collected all your assets there within that account. And that's what we call categorization of assets in accounting. So what will happen is your accountant will ask you at the end of the year, did you buy? Because now, if at all you have some of these assets that you started with at the beginning of the year, the accountants will also need more information in terms of if maybe the year has ended, they will need some information to do with those assets. One of the information they may need is how many assets or how many vehicles did you actually buy during the year, because they know the implication. If you bought in some additional assets, they are going to be depreciated in a different way. That's one of the perspectives that they may look at as the accountants. They may also want to include that figure in the total assets that you have. So they will go ahead to ask those questions maybe at the end of the year. How many have you bought, or even how many have you sold? Because we may be recording assets that we had at the beginning, yet we sold some assets. So those are some of the things that we need to actually do. That's why I'm saying that if you find that the thing is you can't handle, then you can allow your accountant to actually work with you so that you can be able to sort that out, because of that information I've given you. Because that it will be the accountant to know, he will be the one to go through some of the information, to go through even the documentation that you have, that you had, so that to know how much to use in terms of valuing the asset, and even knowing how much figure that he can put out for depreciation. So that's basically what I can talk about on regards to assets, fixed assets. Then the other thing I want to talk about is, because the same way we created the other accounts, here let me just do a quick demo. You just go to new, then here it is an asset. You put asset here, then you could create, if it is land, you create just like that. But here I never wanted to create, but you can go ahead and create, because I know we are going to get a question at the end of the day. We'll go through some of those things. But what I want to talk about next is what we call the accounts payable. You are seeing this accounts payable here. This accounts payable. This one is automatic in QuickBooks. That account is automatically in QuickBooks. And the number that you will see all the way here, the balance total, whichever number that you see here, whichever number that you will see at this point, that number will be representing the total for all bills that have not yet been cleared. We've entered those bills, but we haven't paid those bills. So it will not show the accounts that, or the suppliers that are still demanding us money, but it will show us the total sum of money that is supposed to be paid to the different suppliers. And the same thing happens to the accounts receivable. the same number that you are seeing here will represent those customers that haven't cleared the business. They took goods on credit, we recorded them, and now they haven't paid when we are closing off the period. So the total you are seeing here, it will be the total for those customers we are still demanding money that haven't yet cleared their invoices. And here you are seeing it is 0, but as soon as you create your invoices, of course, those numbers will keep on popping up. They will keep on accumulating until we get the exact totals that may be left uncleared. So that's it. Now let's talk about liabilities. The liabilities as the accounts. In other words, we are now trying to look at the account type for liabilities. A liability is something you owe. In accounting, there are short-term liabilities and there are long-term liabilities. A short term is something you are going to pay off in 12 months. In other words, within 1 year or not exceeding 1 year. And the long term is something that is maybe taking for 3 years, 5 years, 30 years. And some of those maybe, if you can look at an example of those things that may take 5 years, 3 years, 2 years. Maybe you are doing a hire purchase for a car purchase, car payment, a lease payment, a mortgage. Those might be a little bit long term in nature. And in QuickBooks, the short term liabilities are the ones they call other current liabilities. That's what you are seeing here. This is other current liabilities. Those are the ones we call short term liabilities. And the long term, they call them long-term liabilities. So when you see this one here, other current liabilities, these are things that are still not yet been cleared, and it's short term. That means those are any deductions. If let's say they are payroll liabilities, you have not maybe cleared, you haven't cleared your employees, they are still demanding. So it means those are amounts that are still pending for that particular period of time. So some of those may be in terms of even taxes. You may find that you have not cleared the tax for that year, you haven't cleared it. So those are some of the stuffs that you may actually look at. But those are necessarily the things that you are supposed to clear up from. In other words, you are supposed to pay the different appropriate the different entities that are demanding that money. But those are short term because they can actually, you can pay them quickly, and that's why there are other current liabilities. So let's go ahead and stop this video right here, and I want you to go ahead and join me to the next video, that is going to be video number 5, and let's continue talking about charts of accounts, because I said they are going to be in 2 parts. I'm seeing this one is taking a bit more time, and I want you to have something that is a bit short, but when it has everything that you actually need. So let's meet in the part 2 of this video. We'll see you there.